Hi, everyone. This is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. We had him on in November with Turt Ferguson at TF Metals, and we're having him back on by himself. We had him on in the past by himself, too. He's definitely worthy of that. He has a popular website for gold and silver investors, including one of Eric Sprott's favorite websites at silverdoctors.com. He sells precious metals and ammo there. Thank you for joining us today, Doc.
Oh, it's great to be back, Jason. It's been a while.
Yeah, yes, it has. It's been too long, but been trying to expand our coverage besides just gold and silver, including stock market and energy investing and real estate. Because Wall Street from Main Street is more about not just gold and silver, although I think that's an important part of a portfolio, but it's about learning how to invest in other different asset classes. Because yes, gold and silver is definitely still in a long-term bull market. I think you can agree with me on that, but eventually it probably won't be in a bull market, and then there will be the opportunity to invest in other asset classes.
Sure, you're exactly right. And I think also the knowledge gained from, as you mentioned, investing in gold and silver applies really to all markets in general, because investing is really all about the human psychology and understanding human psychology, as well as being able to identify an undervalued asset and act accordingly.
That's a good point, and it's like what Jesse Livermore said, or he was quoted as saying in reminiscences of a stock operator, and it's be right and sit tight. And I think Jim Sinclair also says that too, because Jim Sinclair was mentored by Jesse Livermore and his father, who worked with Jesse Livermore. I think that's very opportune now. But let's talk about what's been going on in the gold and silver markets, since you cover that probably as well as anyone out there, at least for free. You could obviously charge with all the information you have. We have the recent news story here of the London LBMA silver fix ending, or it's about to end, and it's been going on since the 1890s?
Yeah, I think it's 107 years it's been going on, so it's been quite a while.
Now, what type of impact do you think it's going to have on the silver price in the near term, the medium term, or the long term?
Well, there's been a lot of market commentary. There's been a lot of hoorah and excitement that this is the end of the silver manipulation. And while I won't argue that I don't think the end of the silver manipulation is that far off, I'm not convinced how big a role this will play, because while, to be honest, the London fix does play a role, that's certainly not the only time the metals, whether gold or silver, are manipulated. I think it was this morning, if you saw in gold, right on the COMEX open, I believe it was about 8:20 a.m. Let me pull up the numbers here, but there was just a massive paper dump. The price didn't respond quite as much as it has some points in the past, but you had, I think it was like 4,000 or 5,000 contracts dumped instantaneously. So the London fix is not the only thing involved with manipulating precious metals. I do think that perhaps you'll see some unintended consequences regarding liquidity in the market. I think particularly with the physical side of the market, you're going to see a bit of a widening in premiums and spreads, as the London fix is used, especially in silver, to settle large bullion purchases. So without having a fixed price that the parties can agree upon, you're going to see a bit of an increase in the spread on the buy-ask side. And again, we're talking specifically larger purchases, but for the bullion dealers, that does filter down to smaller retail purchases, because if the price they're paying increases by 1, 2, 3, 4 cents, that passes on down through the supply chain to the smaller orders as well. So if you're buying an ounce or two, you're probably not going to really notice it. But if you're acquiring 10, 20, 30,000 ounces of silver at a time, you could see spreads widen a bit in silver.
Now, let's go back to the volume comment you just made very quickly. To add some more color to that, I was reading Dave Kranzler's piece about that today, and he said the normal average volume is about per minute on some of those contracts is about 40 to 50 contracts traded. And then you have these 4,000 massive amount of volume orders just come in. That's almost as much as what would be traded like in a whole day, and you have it dumped in a minute. And if you're a professional trader, you're not going to want to do that. Dave Kranzler talks about that. I've heard David Morgan talk about that extensively. You're going to want to sell into strength. you're going to want, actually, if you're a really astute trader, you're going to want the price to go up, right?
If you're to expand upon that, you're exactly right. And that's if you're a pro. If you're an expert trader, you do the exact opposite. If you're trying to unload your position, you create the illusion that you're about to buy a massive position. You've mentioned Jim Sinclair, I believe, a few moments ago. Jim Sinclair in the last bull market, he's relayed a story that when he wished to sell a large position of gold, he actually hired some Arab-looking individuals or Arab individuals, hired a very expensive limousine, dressed them up in turbans and headdresses, and paraded them out to the COMEX floor. And all the market suddenly, the Arabs are here and they're buying gold. Market spikes. Sinclair unloads his position into the volume, into the price spike. So that's what somebody who's better than a pro, that's what they do when they have a large position that they want to unload. They don't just simply dump it into a thinly traded time in the market and get the worst price possible.
But it's exactly, and that's very astute what Jim Sinclair did. But it seems to me like this was intentionally done to break support, to attempt to break support levels on the charts, and to keep sentiment levels either negative or even more negative than they already are. So it creates, a negative feedback loop, and it feeds on itself. And obviously, the attempt there, I think, is to break the 1180 support level. But I don't think the 1180 support level can be broken for that much longer, because we eventually, it's about reality. It's about supply and demand, and the miners can't make a profit now at these prices. Most of them can't. And if we go back to 1180 or lower, they're just going to turn a lot of the mines off because they're already running at a loss right now.
Yeah, there's been a clear concerted effort really over the past 2 to 3 weeks to cap gold under 1,300 and keep silver pushed under 20. It's been pretty clear. A few times that gold has popped its head above 1,300, had a couple tests of the level, a nice move off of it, and suddenly, boom, it slammed with a classic Swiss staircase, multiple slams back down to 1285, 1290. Then it consolidates for a few days, climbs back to 1,300, and is slammed again. I mean, that's not normal market trading.
Exactly, and it's becoming very boring. It's becoming an overt, predictable pattern where we get to around 1,300 and then just get slammed, and then we have a little bit of a support rally, bounce off support, and we're just stuck in a range for a while. Now, I don't know how long we're going to go sideways, maybe another couple months. But do you think are you surprised that they've been able to keep things capped at these levels, and do you think maybe by the end of the year we're going to probably move a little bit higher?
I have been somewhat, particularly in silver, with the massive demand we've been seeing, at least on the investment side in silver. I mean, if you look at the coin sales, silver coin sales are over 100 to 1 of silver to gold right now. The Canadian Mint is on pace to shatter their sales record here in 2014. The U.S. Mint is on pace to break, maybe not shatter, but anyways, break the sales record. I think we're just at over 21 million ounces sold through basically the first half of May here. So, I mean, investment demand is very strong, the strongest it's been in the entire bull market. But supply currently is being able to keep up with that demand. You're not seeing the massive shortages that we saw about a year ago this time, when silver was pretty much unavailable for 4 to 6 weeks. It's basically 4 to 6 weeks out in any form, investment grade bullion anyways.
Now, I think to add some more color to that, I have some bullion contacts besides just you, and they work in the retail bullion sector, and they're telling me they work here in the United States, and they're telling me that there's just not as many retail buyers. So there is a sparse amount that comes in, but sentiment levels are just so negative that I guess Americans, maybe they've read a little bit of value investing, and they've learned to be contrarians, but as it keeps going lower and lower, they don't want to keep buying the dip. So a lot of Americans have given up. Do you think some of those U.S. mint purchases then are from foreigners? Do you think those are like the Chinese billionaire who sold out of all his Chinese real estate? Do you think he hired maybe some purchasing agents to go and buy from the U.S. mint? then, or do you think it's rich oil money who doesn't want to deal with COMEX or LBMA anymore, and they're instead putting their purchases of silver coins and bars and gold from the Canadian and U.S. mints?
I mean, certainly we could speculate. I haven't heard anything inside as far as sort of the industry. I know Ted Butler came out recently and said it was J.P. Morgan buying them all, and I can guarantee it's not J.P. Morgan. I mean, personally, we are still seeing strong retail demand, whether it's from 1 ounce up to 10, 15 monster box orders. We're still seeing, personally, at SD Bullion, pretty strong retail demand. And I mean, I think the U.S. Mint numbers are validating that with 21 million coins sold so far here in 2014. Whether it's Asian investors or anything like that, we're not seeing that personally at SD Bullion. I mean, it's pretty much continued consistent U.S. retail demand among your average Joe gold and silver investor, but and I certainly haven't heard any rumors of anything to that effect, so it kind of just be speculation and as far as any information I've heard. But to me, it looks like just continued sustained U.S. retail demand that, yeah, it's not quite as frenzied as it was, say, either last spring when we had the massacre, or as well as in the way up back in 2010, 2011, when it was off to the races and everybody was telling everybody at work and all their buddies and everybody was buying silver. So no, there's no frenzied buying and there's no real excitement in the market, but we are just seeing a sustained purchases among the retail public.
Well, that's good then that you still have a good amount of retail demand, because the people I talk, maybe it's just a badly run firm of my other contact there. They don't do good marketing. Maybe that's it, because there has been a good amount of local bullion dealers that have failed, right? They purchase their inventory on margin, right, with leverage at a much higher price, and now they can't sell it because the spreads normally, especially when you're buying a lot on margin, are not that good in the business, right?
Right. I mean, if you're not hedging your inventory and you're buying it at a higher price, you're going to be screwed when the price comes down to $20. There's been a lot of speculation that Tulving was doing the same, which obviously went out of business a couple of months ago. But anybody who knows what they're doing and is hedging their inventories, they're not affected by the price decline, and they're not risking or betting or speculating on the spot price. They're really not affected by it that much outside of the demand side.
Now, let's continue our demand, but talking about demand, but let's look at demand coming out of Asia. We have Kuz Jansen providing numbers, and we have Alistair McLeod providing some numbers for gold and silver demand. Kuz Jansen of In Gold We Trust, for our listeners who are not familiar with him, he's reported that India, I think, bought over 5,000 tons of physical silver last year because of the import duties on gold, and they have a humongous amount of gold smuggling. Do you think that demand out of Asia is going to continue to be strong, or do you think then that because their economies are slowing down that they're going to stop purchasing as much?
I think in gold particularly, the second half of 2014, and then through the wedding season in India, you're going to see a resurgence in gold demand. For those who haven't been following, Modi won in a landslide, and he's a very strong gold proponent versus the current Indian administration is I don't know if you want to call it anti-gold or just subservient to the Federal Reserve masters as they can get. But every restriction they could throw out of the book at gold imports, they've implemented and done so over the past few years. And Modi, at least campaign-wise, has promised to reverse that as a pro-gold advocate. So if he follows through on that and reopens the Indian market back up to gold, you're going to have several years of pent-up demand. And I mean, let's be honest, Indian demand never stopped. It just a large majority of it just went underground into the black market. But when it's officially allowed again, you're going to have a big uptick in the officially reported gold imports into India. And I think that'll fuel a gold rally here in the next probably 12 to 18 months.
Yeah, and that's an important point about politicians that you brought up, is doing what they say, because we've heard a lot of rhetoric from, we could just name a long list of different politicians through many different decades, whether it's the U.S. or any other country, and most of them will do or say anything to get elected, and then after they get elected, they won't do anything they said. So it sounds like India may be going back to more of a pro-gold policy, but we'll wait and see to what happens. But even if it doesn't happen, I think the black market for Indian gold demand will be strong. Just some of the stories of how desperate Indians are to smuggle gold into the country is just really amazing.
Yeah, I mean, from the story, now I'm drawing a blank if it was India or China, but the recent story where the guy ingested, I think, 8 or 10 gold bars, and they got caught in his colon, and they had to have it surgically removed. I think that was India. But
India,
but,
yeah.
Yeah, like you said, to what lengths they'll go to smuggle gold into the country.
Yeah, they were also melting down gold bars into look-like TV sets, and then they were painting them black, and they were trying to smuggle them in from Pakistan to India that way. And there's almost everyone on there was even someone in one of India's main newspapers admitting he smuggled gold bullion in. I saw a hedge fund manager sent me a story about that he one of their main writers admitted he smuggled gold bullion in, that he stuck it on chains or other things to evade customs, and just talking about how bureaucratic and ridiculous like the gold import tax duties are, because I guess a lot of the people don't agree with it. And
gold
supposedly
is like the culture in India. It'd be like Obama banning cigarettes in the U.S. It wouldn't do anything.
Yeah, that's a very good point. And the Indians know that they're just like the Chinese. They know that politicians and governments have not told the truth for a very long time and have stolen from them through taxes and inflation for a very long time. I think I heard about this, that the value of in 1960 it was 160 rupees for 1 gold ounce, and now it's over 160,000. It's some absurd number. Only like 50 or 60 years later. And that just shows the amount of inflation that's occurred in India, really just in someone's lifetime.
Yeah, it is a substantial, and I mean, that's what's ingrained in Indian culture. They don't save their wealth in rupees. They save in gold and to a lesser extent silver.
Now, let's talk about the macroeconomic situation very briefly before we talk more about your lead bullion business and your World War II tribute coin. Are you surprised that the markets and things have kept together this long, despite the Fed apparently pulling money out of the market with the taper?
I would say if you asked me in 2008, yes, I'm very surprised from that perspective that they've been able to basically prolong a whole nother cycle of the bubble inflating game. But as far as the past 6 to 12 months, I would say not as much surprised. I think from where we're at right now, you have probably another 12 to 18 months that they'll be able to hold things together somewhat. Although I do think the indicators are showing the economy that never completely recovered much really at all is already showing signs of rolling over again, and that's going to pick up here as we go into the second half of the summer and the fall. But as far as a complete collapse, I think they'll be able to hold things together for at least 18 months on the short end, and up probably 3 to 4 years on the long end would be my view.
Yeah, they've been able to get an unprecedented amount of global cooperation from all the different central banks. So you have Europe combining with the U.S. You have the Belgium Treasury purchases, which are just insane. You have Japan and the U.S. coordinating together. Japan buying a record amount. They bought a humongous amount of bonds over the years, and they want their currency shortened. You've had all these other developing world countries prop up the dollar for a very long time so the U.S. consumer could have increased purchasing power. And now finally you're starting to see the developing world, the Chinas, the Indias, the Russias, the Brazils, just get flooded with inflation, and they've had enormous amounts of misallocations of capital. With the interest rates increasing, the interest rates have not increased in the developed world really, but they've increased in those countries. And you've just seen those economies which were helping prop up the developed world, you've had them slow down a lot. So those guys might be the subprime, but eventually those problems are going to come back to the developed world. They're not going to be able to outsource all the inflation and all the other problems that the developing world is having for much longer, I think.
Yeah, and you mentioned the interest rates. Didn't Bernanke just come out last week and say he doesn't foresee high interest rates in his lifetime?
Well, he would know, right? Because he would know how they manipulate them. So I guess that would be like, without saying we intentionally manipulate them, he could craft an argument because he's like a politician and he has all the academic background. He could just say, well, the Keynesian viewpoint is that the interest rates are going to be low because there's no real demand for money or things like this. And he was like, that's why interest rates are going to stay low. That's not why interest rates are staying low. Interest rates are staying low because of the over-the-counter derivatives market and all the other manipulations that are going on. Because if interest rates, go above 3%, even a couple more percentage points above that, almost all the U.S.'s tax revenues are going to go towards just debt service repayments. I think Japan is probably the closest to the brink for that. Japan is in the most danger in the near term.
Yeah, I would agree with that, because not only is their debt service levels worse than ours, but they also have a much worse population demographic. It's been a few months ago, but I believe it was early in 2014 that they have they're selling in Japan. They're selling more adult diapers than they are baby diapers. And that's a big problem with your population demographic when you have more upper end elderly that are basically not being able to contribute to production or society whatsoever than you are new members of your society being born.
Yeah, and their younger generation's going to be dealing with inflation, which is lied about in their CPI, because their consumer prices, their food prices are going nuts. Their import prices on energy and gasoline and electricity are going nuts, insanely high. Their rents are not cheap. And there's going to be there's going to be demographic warfare there, because the younger people, my generation's not going to want to pay for all the healthcare stuff of their older generation. But actually, to add to that point too, I was watching a robotics documentary before we went on here on the podcast, and it was talking about how Japan, because they might not be able to afford all the healthcare benefits, they're spending like crazy on robots to take care of the elderly. So
there you go, your own robotic maid.
Yeah, and cook, and all these butler and help and nurse and all these other things, because they're figuring the younger generation either is not going to be around or they're not going to want to help out. So maybe that's the way most of society is going.
The Jetsons.
Yeah, it's kind of dystopian Jetsons, but yeah, because we have inflation and the potential war conflicts and all these other things that are going on in addition to the Jetsons. Because the Jetsons, I don't remember the Jetsons, Doc, talking about inflation and, an authoritarian government and all these other things, do you?
Sorry,
hello?
You kind of cut out there, Jason.
Yeah, about the Jetsons, I don't remember the Jetsons during the TV show talking about inflation and an authoritarian government and all these not-so-happy things that we're unfortunately having to deal with right now in the world.
No, I don't remember that either, although I haven't freshened up on my Jetsons lately.
Now, let's transition back to your company really quick to wrap up the interview. You have a new lead bullion business. What decided to get you into selling ammo exactly?
Well, a couple of different things. Kind of the same, to start with, the same thing that brought us into the gold and silver bullion dealers business originally was just our passion for it, and just something we personally believed in, and wanted to be able to offer average Americans the opportunity to protect their wealth and preserve it. Something I really believe in, and the other founder, Tyler, also really believes in. And really, it's the same thing with ammunition. Obviously, over the last 5 years, ammunition has been one of the top performing asset classes, really, in the world. But outside of that, if you look at what's progressing in our country from a historical perspective, it's very important for citizens to be armed and be able to protect themselves from what the Second Amendment was originally included for, which is to protect Americans from an encroaching federal government that so really in all of American history, I believe now is the most important time of ever to that really every American should be armed and be able to not only protect their family from intruders and protect what's theirs, which is, I mean, obviously another important use for weapons and ammunition, but specifically the Second Amendment is not about sporting and going out pheasant shooting like Obama and the Democrats would have you believe, but it's about protecting Americans from an encroaching federal government.
Exactly, and that's the overall theme of the Constitution in general. It's designed to protect the people from the government, not as the bureaucrats in Washington, the progressives would say, to protect the government from the people. That's our founding fathers knew the scary things that big government could bring with it. They had dealt with the British Empire, and in terms of looking at the ammo market, when I've researched it myself, I talked about this briefly with you before we started recording. There's just a lot of it's obviously in a bull market. Now, whether Obama or the Department of Homeland Security has induced it or whatnot, you have enormous growth in gun sales, and that's not just with, white redneck, the stereotype, the white redneck. The women gun sales are enormously increasing. Women are independent. In a lot of metro cities now, Doc, women make more money than men. They hang out with a lot of girlfriends. A lot of women now like to go to the shooting range. They like to carry a handgun for protection. This is a market where, traditionally women had not except for certain areas of the United States, had not really ever wanted to own a gun, but that's no longer the case. So you have a over 30% growing women demographic, and then you have what the Department of Homeland Security is doing, and that's just creating shortages in the market, right?
Yeah, not only do you have exploding demand from the American public because they're afraid of their federal government and they're purchasing weapons and ammunition ahead of any potential ban, but exactly, you have every federal bureaucracy and acronym known to man purchasing 5 billion rounds of ammunition like the zombie apocalypse is tomorrow. I mean, we have the U.S. Postal Service purchasing 1 billion rounds of ammunition.
What? I did not know that.
Yeah, the U.S. Postal Service, there's actually a contract out right now that the U.S. Department of Agriculture is looking for a contract for, I forget if it was fully automatic or semi-automatic weapons and ammo. The IRS story came out maybe 6 or 8 months ago now that I can't remember how many billion rounds or million rounds it was the purchase and they're going through. But all these agencies that have nothing to do with law enforcement, they have no legitimate reason to be stockpiling ammunition, but they are, and because of that, ammunition remains very scarce for the average American to find. What we're seeing with SD Bullion on the wholesale side, there's really 4 or 5 large distributors in the U.S., and the manufacturers sell directly to distributors. So, like if you go into Cabela's or Dick's or wherever you purchase your ammunition from, all that ammunition is sourced from one of the 4 or 5 largest distributors in the U.S., and many of them haven't seen. Just talked with our rep this week, and many of them haven't seen a round of, say, 9mm or 22mm in weeks. And this is like the distributors. We're not talking about your little local gun shop in Hicksville, Tennessee, or wherever you live in a small town of 500 people. We're talking about distributors that service 5,000 dealers in the U.S., and they don't have any access to common caliber ammunition.
That's very interesting. I did not know that. But in also researching the market, when I went to a shooting range, and I've only been to a shooting range a couple times, but I think it was actually quite fun in learning how to shoot a gun and going to the shooting range. But the bullets, the ammo, you're only allowed in a lot of cases to buy 1 box, and they only give you a price quote for a week or 2. And then when you talk with other people there, everyone is bitching about bullet and ammo prices. And because the prices are going up almost every single month, they're going up, 5% a month or something. It's some ridiculous number. And if you look at some of the prices, I think they've way more than doubled, since 2008, right?
Oh, for sure, definitely more than doubled. And a lot of retail places, they've it's gone up a lot higher and a lot faster than that because really, like you said, you can't keep it in stock. Allocation and raising the prices is the only way you can keep anything in stock.
Now, in wrapping up so that definitely sounds like an interesting investing opportunity there, and it's really good that you're giving people all over the United States access to get some ammo that they at a reasonable price that they probably wouldn't be able to get. You're definitely serving, an entrepreneurship role in that aspect because obviously the government has created an unintended consequence and market scarcity where there really shouldn't be, right?
Yeah, if you want my opinion on the best investment opportunity in the U.S. today, if I had the expertise, I'd do it. But start your own ammunition production company and make it yourself.
Actually, I have an investment opportunity that maybe we should talk afterwards. But we'll talk about that afterwards, though. Yes, I agree. I've researched the market, and I would concur with that statement. And I think gold and guns go very well together. So if you have a whole safe full of gold or silver, it's probably smart to own a gun because you don't know if your housekeeper or your cousin who has student loan debt or I've heard stories, unfortunately, Doc, I don't know about you, from friends who have had family members or cousins or friends who are in financial trouble steal gold or silver from them. So it's very sad, but I think a lot of people have stories like this. So I mean, guns do go pretty well when you have a lot of metal lying around the house in a safe or hidden somewhere else.
Yeah, guns serve a role in there in that aspect, but also really the best advice is just keep your mouth shut and don't let any of your friends or relatives know you have it.
It's a very good point, but unfortunately that's not really human nature. So yeah, but then again, being a good investor is not in human nature either, as we tend to herd mentality and chase higher profits and things like metal in 2011 or technology stocks or real estate and things like that, and then we buy high and sell low, or at least most humans do.
Yeah, that's human nature.
Exactly. Now, in wrapping up the interview, Doc, you wanted to be able to talk about this new World War II tribute coin you have coming out, so please tell our listeners about that.
Yeah, we're really excited about it. It's scheduled to launch June 6th. It's called the Heroes SD War Collection. The first coin is the D-Day coin to commemorate the 70th anniversary of the Normandy invasion. And both of my grandfathers served in World War II, one in the Pacific as a bombardier, and the other in both, he wasn't involved in the D-Day invasion. He was in the 101st Airborne and was a lead sniper in his entire regiment. And we found out after he died a few years ago that he was the lead sniper, and he was only one of, I think, 30 people in his entire regiment that came back alive. So I've long had a fascination with World War II and wanting to kind of honor and remember those Americans with this June 6th will be the 70th anniversary of the Normandy D-Day invasion. So the D-Day coin commemorates the 70th anniversary of the Allied invasion of France, and I spent about 3 months trying to find out all of the information. There was 1,557 American missing in action troops that were never found, that were lost on D-Day, and amazingly, that information is not available from the U.S. government anywhere. It's not available online. So the only place that has it is on the wall in the Garden of the Missing, and that American, the Normandy American Memorial over in France. So we were able to actually obtain the information from them, and each one of the 1,557 proof coins is going to uniquely honor one of the missing American troops lost on D-Day. It'll have their name, rank, unit, their home state, and their honors earned during their service. And obviously all of them had the Purple Heart, but many had quite a few other honors earned as well. So we're really excited about that coming up here on June 6th for the 70th anniversary of the D-Day.
It's very good. And please tell our listeners more about the Silver Doctors website and your weekly metals, Rob.
Yeah, the silverdoctors.com is kind of a macro financial news and analysis website focused on heavily on gold and silver. Commentary from a lot of leading people in industry from Eric Sprott to, you mentioned, Kuz Jansen focuses on Asian gold demand, to Alistair McLeod, Ted Butler, and throughout the industry. So that's silverdoctors.com, and as you mentioned, the weekly metals and markets wrap. We have a weekly show recapping trading in the markets for the week, and then really in the macro financial week that was as well. And we typically have a guest host on the show. I record that with Eric Dubin, and we have a guest host weekly as well on that. So that's been growing in subscribers and popularity, and it's been something I've really enjoyed over the last year or two.
Yeah, I really enjoy the weekly metals and markets wrap. I think it's not too long and it's not too short, and it covers a lot of pertinent things each week. It's a really efficient way for someone who doesn't have the time to read every single article you put on your website. You summarize a lot of the key stuff.
Yeah, we try to pick out the important and pertinent stories for the week affecting the markets and in general, the metals in particular.
Now, I just want to thank you for your time, and I really enjoy your website. Keep up the good work, and we'll have you back on again soon.
All right. It was my pleasure, Jason. Always great to be back.